Welcome, guys, to my portfolio overview. Today, I want to break down my portfolio and explain to you guys why I invest in these ETFs and stocks. So, to start off, the backbone, as I'd call it, of my portfolio is these two ETFs right here. We got VU, which is an S&P 500 fund, and SCHD, which is a dividend equity fund. VU is a little more technology focused. They have a little more weight in Amazon and Microsoft and Apple and those kind of companies. While SCHD is more value focused, you might see some stocks that you don't really recognize, but most you will. And they're a little more focused on dividend growth and value, et cetera, et cetera. So I think it's a good mix. And so far, I am very confident in these two. And I will continue to DCA into it every market day. Right here, I DCA $50 every market day into these two ETFs, and this is what's known as a recurring investment. I think it's the best way to go. If you guys don't know what a recurring investment is, I recommend you look into it. Um, it's a lot better than lump sum buying into an ETF, and it takes a lot of the stress out of investing, especially when you're investing into these two very strong ETFs. So I can go on vacation for a week or two and not worry about it because it is automatically investing. What is it? I think I have $30 going into. I have $20 going into VU every day and $30 going into SCHD every day. So $50 total. Um, and so far, it's worked for me. But right now, they are not the biggest holdings in my portfolio. I want them to be, and they will be with time. Um, I just need that dollar cost averaging to work its magic, and eventually, it'll be most of my portfolio. So, my ultimate goal with this portfolio is way down the road, obviously, but to one day in the future live off dividends. And that would be a dream come true because I can pretty much use these dividend payments to pay for bills or whatever I really need for at the time. Um, Now this does take a lot of money, so that's why I'm including some of these growth stocks, which is where most of my portfolio is right now. I want to go over these growth stocks with you and explain why I chose these companies and maybe why I didn't choose others. So this is going to be an extremely simplified um, video, and I may go into depth in other videos. I'm not sure. I'm not very good at stock analysis. That's not my thing. I kind of have a very simplistic approach when it comes to these things. So one of the largest holdings I have is Apple. Um, let's go to my homepage here. So Apple has actually been taking a hit the past month and 3 months, as you can see, down 11.72% 3 months. That's big for Apple. Usually Apple's a market leader here, so I'm not worried at all. I think it's a great time to buy. I bought a little higher. I think my average is 180 something. Yeah, 183. So I bought like around here. But there's no worries. I think I will continue to buy as soon as I get some free cash to do so. But anyways, Apple is a strong company that has products that I use and believe in. Not to mention the new Apple Vision Pro, which I think will be huge in the AI space. I think they're really going to be the ones bringing AI to the general population. And I've seen some videos. I haven't had the privilege to test it in person yet. I've gone to the Apple store and seen people do it, but it looks really incredible what these Apple Vision Pros can do. So, nonetheless, I'm very excited to be an investor in this company. Not to mention they also pay a dividend, which is always a plus. And like I said, that's my goal is dividend. Obviously, I have dividend. I think it's called dividend drip or whatever. It's when or dividend reinvestments. Basically, any dividends I get paid from any of these stocks that you see here, they're going to be reinvested automatically. So get that snowball effect going. But yeah, they pay a 0.56 dividend percent here, so it's not bad. That's a pretty big chunk of my portfolio. It's 17%. But like I said, it's going to go down because most of my money is flowing into these ETFs, especially at this time whenever the market is at all-time highs like it is right now. It's kind of scary investing at all-time highs because you never know when the pullback is going to come. But good thing about being a long-term investor, and not trying to time the market, is that you don't have to worry about pullbacks or all-time highs or all-time lows. You just invest and you wait and you hold and wait, and it pays off. It will pay off huge. So next up, we have Microsoft. I think Microsoft's going to be a huge leader when it comes to AI. Countless opportunities. Not to mention, it also pays another small dividend, just like Apple. Let's see. Let's pull up Microsoft here. Only have 4 shares. It's 14% of my portfolio, so it's a decent chunk. I want to add more, but it's a little expensive in my opinion right now. However, I don't think it's going to get any cheaper. So we'll see. Maybe we'll get a dip here soon, and I'll add more whenever I can and get the cash to do so. But they pay a 0.68% dividend yield, so not bad. And they are the largest company market cap wise. So it's if you don't have Microsoft in your portfolio, I mean, what are you doing? So next up, this is going to ruffle some feathers here. Tesla. Tesla is a huge chunk of my portfolio, and it has dragged my portfolio down a little bit. But I think Tesla is probably going to be the position that pays off the most in about 5 to 10 years. I think Tesla is the king of innovation and autonomy. You got full self-driving, robo-taxi, Optimus. I mean, all this stuff's going to be huge. The problem is people classify Tesla as just an electric vehicle company, and that's just simply not what it is. But right now, when you look at the price and the market cap and the PE ratio, and you look at the current day, oh, they're just making cars, but it doesn't make much sense. But when you look at the future opportunity, it's to me, it's an obvious must-have in a portfolio. Yes, it's risky. Yes, Elon Musk can be a little vocal at times, but I think that it's going to pay off dramatically. I have very, very, very high hopes for this company in the future, and I want to add more if it drops a little lower here. I think my average cost is 180. Yeah, so not bad. I went $5 down. I think it went down to as low as 160, if I recall correctly. 163 around there. So it's a whopping 19% of my portfolio. So that's huge. And the reason it's so high is because when it was dropping lower than my average cost, my average cost wasn't always 180. I think it was like in the 185 range. I bought around here. Um, and I thought that was the bottom. And it wasn't, which is no big deal. So I took advantage of that opportunity and I bought more shares, and it brought down my average cost to 180. So make sure you guys are averaging down when you can, when you have the cash. Right now, um, I'm trying to get more cash to throw into these undervalued companies, in my opinion. Next up, we have Google. Now, Google recently got a lot of backlash for their AI, Gemini, I think it is. It's competing with ChatGPT, OpenAI, etc. But yeah, they received a lot of backlash for that, and the stock took quite the hit. If you look at the year chart, see, it's actually recovered quite nicely, but it dropped all the way down from it went from 153 to 133, below 133, like $130 a share. So that's over a $23 share, $23 a share drop. That's huge. But like I said, it has recovered nicely. I think people realize like, wow, this is oversold, and people are freaking out. This is 16% of my portfolio. My average cost is 142, so we're up a little bit on this. It's kind of nice. No plans on selling this ever. I think there's huge potential here. I think we're really at the cusp here of all this artificial intelligence stuff. A lot of people think that it's all hype and this and that. I think there is a lot of hype behind it. However, it is, you can't deny that it is the future. We may not be there yet, but nonetheless, we are in just the beginning. So, I mean, Alphabet isn't even at all-time highs. I mean, I guess it's close, or maybe it's chilling around there, but it's not substan like at crazy all new highs. I mean, look at the COVID era. I mean, it went up another 50 or 100%. So there's a lot of room for this to run. It's actually one of the best priced Mag 7 stocks, in my opinion. Only got a 26 PE ratio, so it's not bad. Only a market cap of 1.88 trillion. I think they can go a lot higher than that. Um, Next up, I want to talk about Amazon. Amazon is it's a little smaller chunk of my portfolio. It's only 12%. But Amazon is slept on, in my opinion. I think people, when people think Amazon, they think, oh, well, Amazon.com and shipping. And yeah, that's a big part of their company. But Amazon has their hands in so many things you don't even realize. And I think when it comes to AI, they're very overlooked. I mean, like when you think about their Alexa, the opportunities they can do with their Alexa is insane. And like I said, if you really did your research and looked at all the things Amazon is investing in, is a part of, it's really insane. The world almost runs on Amazon. It's a huge part of our day-to-day lives, whether you realize it or not. So our average cost is 171. I was a little skeptical buying there because it was right after the earnings report. So I was, nervous for the dip, but it's actually performed very well. I have high hopes for this one as well. I have high hopes for all of these stocks. Next up, we have Meta. I have a very very small amount of money in Meta, and that is because once again I bought after earnings around here. So obviously, when you're at all-time highs, you get really intimidated to buy these companies. You're like, wow, is this overvalued? Am I buying at the top here? Um, but it's performed pretty nicely. I will definitely be adding more if it dips. I hope it goes down. I would be completely fine with all of these plays going down because it gives me more opportunity to buy. I don't like buying all time highs, and we'll talk about more about that in a second with Nvidia here. But Meta also announced a recent dividend, which is awesome. It's a small dividend. I think it's only what is it? It's only 0.10%. So very low dividend, but nonetheless, it's still a dividend, and there's opportunity they can increase that and stuff like that. So they're going to be a huge player when it comes to AI and the metaverse and digital world as a whole. So they've shown great growth as well compared to Google. So a lot of money has been flowing into Meta recently. I mean, look at the 5-year chart. That's ridiculous. I mean, what a recovery. So I also wanted to touch on Nvidia. Now, Nvidia is on my watch list. If you go down here, Nvidia's right here. Now, Nvidia's at $900 a share right now. I've watched this thing. This thing is an animal. I've watched this thing run up from 500, and I think this is the top here, and then it just keeps going. And then earnings comes out around this time. I'm like, okay, it's dipping. Maybe this is the top. No, earnings was fantastic, and it keeps going and going and going and going. Do I believe in Nvidia? Absolutely. I feel like you cannot be bearish on Nvidia long term. It's ridiculous. I mean, they're fueling the AI race. They're not just a participant in it, like these other companies. These companies need NVIDIA. And if they don't use NVIDIA chips, then they fall behind. It's as simple as that. So, I mean, the dividend on NVIDIA is a joke, 0.02. I don't even know how that's even allowed. But do I want a piece of the pie? Absolutely. However, I do not feel comfortable buying at this price. And who knows? It may keep running up. It might go to I believe it'll go to 1,000 a share, and it may go to $1,500 a share, and so on. But I'm not going to chase a company. I mean, it's at a market cap of 2.26 trillion. That's insane. Do I think it's overvalued? I mean, it has a price to earnings ratio of 75.72, but you can't just look at that and say, oh, well, it's overvalued, because the growth is there and the numbers are insane. At the recent GTC event, I mean, some of the stuff they talked about and showed off was really incredible. So if NVIDIA takes a dip, which, if I'm being honest, I don't see why it would. There's just so much positive news and positive outlook for NVIDIA. Something's going to need to change, either a negative catalyst or maybe like a missed earnings report or something, decreased demand, which I don't see happening, but you never know. So that's why I'm not invested in NVIDIA. Never chase a play. There's always other plays to be made. So while other people may be, buying NVIDIA here, which I'm not saying is a bad move, but I'm just saying while other people are buying up here, I would rather be buying Google or Apple on this dip, or Tesla while it's down, and building my position there. Then maybe by that time they start coming up, maybe NVIDIA starts going down a little bit. I can scoop up some shares there. So that's my thought process. I believe in NVIDIA. It's just I don't feel comfortable buying right now. So that's pretty much my portfolio as a whole, and that's my plan. I really want to focus on a good balance between dividend and growth investing. I have a few stocks on my watch list that I'll go over in depth a little more in another video. I got some small caps here to look out for that I believe in, like you got SoFi, UiPath has to do with like robotics, and CRISPR has to do with gene editing. There's all kinds of stuff. Unity software I think will be huge in the metaverse, but there's endless opportunities here. But I don't have enough capital yet, in my opinion, to be throwing at these small cap plays quite yet. I want to get a little more, plant my feet in some of these bigger boys over here, the Mag 7 as some people call it, and really establish a good cost basis. And like I said, right now we're at market highs, so when the market is going to pull back, it doesn't just go up forever. So the market's going to pull back, and when the S&P 500 pulls back, these stocks pull back. So I want to be there with some capital to add some more shares at a better price. And I think that's it for this video. It's Easter weekend, so happy Easter, everyone. And I might try and make a video Monday around market open, and maybe we'll talk about maybe some stocks on my watch list, or maybe what I'm looking forward to this week. Tesla has some I think delivery numbers Tuesday or something, so I would not be surprised to see it go lower based on those numbers. But like I said, I'm just adding more. I believe in the company, and that's what most people have to realize is don't get caught up in the bad news. And numbers don't lie. However, the potential is there. The potential is huge with Tesla. And if you believe in something and you know what you're investing in, then don't listen to people on the internet, including me, telling you otherwise. So invest in what you believe in. So that'll be it for this video. Thank you guys for watching, and I will catch you guys in the next one.